Good day. Welcome to Eazitrade video guide on how to navigate through MetaTrader 5, also known as MT5. So once you open your MetaTrader app, after you've done the linking successfully, which is one of the guide on the 15 video lessons, the next thing you have to do is open your MT5, all right, and you'll be presented with the charts, the trading charts. The default is often in BTC. You will see BTC with paired with different currency, BTC USD, BTC AUD, and so on and so forth. You won't see all of these. So how to get that done is simply by clicking on this, clicking on this pencil symbol or icon. So once you click on it, click on the cross, or you can click on the cross. All right. But before you click on the cross, you would click on the delete icon to remove all those BTC pairs except BTC USD and BTC AUD, because that one won't go off in the meantime, but later it can be removed. So once you click on the delete, you would use this empty box to select all the pairs that you want to remove aside BTC. That's if you are seeing BTC paired with other currencies. All right, then you click on the delete. It will turn into blue. You click, it will delete. Then the next thing is to add the pairs you will be needing, that you'll be trading with. For a start, you can stick to major pairs. And what are the major pairs? We have Euro USD, all right, which has already been added. So what I would do is I'm going to remove Euro USD from the list and later add it back so that you see how. Okay, let me remove GBP USD. Let me remove that one and I will add it back. So when you use the search, you click on GBP USD, you tap on it. That's the currency you'll be. Once you tap on it, it will add automatically under the list of quotes, to be under the list of quotes as written here below. So the major pairs are simply pairs that are simply currencies that are paired with USD and that USD is paired with. And what are the examples? We have USD JPY, we have USD CAD, we have AUD USD, aside XAU USD on this list. That is gold. Gold is not a major pair, it's a metal. Take note, and is highly volatile. So as a beginner, it's not advisable for you to trade gold. So you stick to major pairs. All right. So any currency that is paired with USD or USD is paired with is regarded as major pairs. Take note. Now the next thing is to set up your MetaTrader 5. It will look this empty. So how to get it set up? You will go straight up to your indicators. Is either you tap your screen, all right? You see this symbol here and this, they are similar. So it's either you tap your screen for this to pop up. The tapping of screen is very important because it will help you to knowing how to navigate through other parts of your MT5, like the time frame. All right. So once you click, either you are clicking here or you are clicking the one I showed you now. Now we want to set up the moving average. Moving average helps you to understand market trend, to knowing if the market is moving upwards, downwards, or sideways. All right. So how to get it set up? You click on this icon, the F and the cross. You click on it and you select moving average. The first one to enter is your moving average 20. Whatever you see me do here, please replicate same. The color, everything. So period 20, shift 0. If your method is on simple like this, change it to exponential. All right, change it to exponential. So the apply, close, styles. Under style, 3 pixel. Then the color, we are using light blue as seen here. Levels, you leave it that way. Time frame, all. Once you're done, you click on save. You click on save. The next moving average is moving average 50. You click on that same icon, click on moving average and change the period here to 50. All right, so we are using the method exponential, apply, close, style, 3 pixel. We are using yellow or light green as the case may be. We are using this for moving average 50. Then you click on save. All right, the next one is moving average 100. You select your moving average and enter moving average 100. Change color, same exponential, close, pixel 3, change color to red. All right, then you click on save. Now if you come to your screen, you see that all has been well set. Now looking at this time frame, we are on 15 minutes time frame. You will see that the market is in an upward movement. All right, you can see how every time the market gets to the 3 moving average, it will react. So to tell you that the market is in an upward movement in 15 minutes chart, let's see 1 hour chart or 30 minutes. Let's see 30 minutes, same. You can see that the market is in an upward movement. So that's what moving average helps you to understand. In 1 hour, it should be same. All right, good. Can you see? So, and so on and so forth. Until I think daily says otherwise. Daily says otherwise. Daily, the market is in a downtrend because it is below the moving averages. It is below the moving averages, but it is trying to come back up. It is doing what they call a reversal. Can you see? It is trying to buy back up on daily time frame. So there's every likelihood that this green candle will touch this red, that is the 100 period moving average on the daily time frame. But on the lower time frame, it is currently in an uptrend. So that is that for moving average. So now let's take a look at the next indicator to set up. You click here or you tap your screen. The next is the RSI, the relative strength index. On the relative strength index, you can find that under oscillators. All right. So relative strength index helps you to understand if the currency or the pair has done what they call overbought or oversold. That will be explained. For the relative strength index, no changes, leave it as it's seen as default. Then you click on save. Once you click on save, you will see your relative strength index below your chart. All right, so let me explain what this means. If the line, these lines, all right, these blue lines here, if it moves above or if it moves close to the 70 to 100, it simply means that it is overbought. If it's at 30, all right, it simply means it is oversold. Okay, now I repeat again, if it's around 70 to 100, it is overbought. If it's below 70 and heading to 30, it is oversold. So if it's above, in other words, if it's above 70, All right, if it's above 70, it is overbought, and if it's below, if it's at 30 and below, it is oversold. All right, so take note. What that means, it simply means that it will help you to knowing when to start looking for buy opportunities and sell opportunities. All right, using the relative strength index. All right, it's just one of the confirmations. It is not the only confirmation. As a trader, you must learn to use different confirmations before taking your trades. All right, this is the daily time frame, and we can see that the market is heading to an overbought region. All right, so if we go to lower time frames like 4 hours, all right, we can see that the market has gone above the 70. The number 70. That's to tell you that the market got oversold a few hours ago and is heading back up. All right, now if we look below, we'll see that the market was in a downtrend for a period of time because it was at 30 and it was trading below 30. All right, can we see? All right, and the relative strength index helps you to understand certain charts pattern when formed, but that is when you get to the advanced level in Eazitrade. All right, so that is that for relative strength index. Now if you go to lower time frame like 15 minutes, you can see that the relative strength index, the trend line, is currently above 70. That is oversold. So as at this point, you'll be careful to buy in the market. You will want to wait for it to peak so that you can look out for sell opportunities. Okay, so that is for relative strength index. Now if you tap your screen, okay, let me say a few things before I wrap up this video. Now we have this, which is our time frame, that's 15 minutes. M15 means 15 minutes. M1 means 1 minute. M5 means 5 minutes, and so on and so forth. All right, so we have M30, which means 30 minutes. H1 means what? 1 hour. H4, 4 hours. D1, daily. W1, weekly. MN, monthly. If you tap your screen, you will see them there also. All right, so now the next thing is how to take your trade. How to take your trade? All you have to do is click on trade below your account. If you click on trade, all right, you click on the cross side by the upper right of your trading account. All right, then as a beginner trading with a small account, it is advisable for you to stick to using the mini lot size, which is 0.01. Anything above this, you are putting your account on a risk, on a big risk. All right, anything above this, provided you are trading with anything less than $100, you are putting your account in a big risk. So stick to the mini lot size. All right, so if you want to take your trade based on your analysis or based on the signal sent by any of the coaches. So now we are on gold. So if I take this trade on gold, I'll be doing the wrong thing as a beginner. All I have to do is change the symbol using this particular icon here. Change the symbol to a major pair. So let's look at GBP USD, Great Britain Pounds USD. Okay, so before I go into this trade, I have to set my take profit and SL. But before I set it, let me go back to GBP USD chart and see where I would like to take the trade. See if I would want to take a sell or a buy. Now looking at this trade, looking at this chart rather, we can see that the market is buying upwards. On 5 minutes, same. On 30 minutes, still buying. On 4 hours, still buying. So let me just, for the sake of this video, I'm going to take a buy. All right, and this is how I would want to set my take profit and stop loss. Now looking at this, okay, let's go to the higher time frame. Okay, good. So it looks like the market wants to head to this 50 period moving average. So this is my take profit will be around something close to the 50 period moving average, which is 1.24701. 1.24701, and my stop loss will be below these two candlesticks, which is the green and the red, which is 1.23049. So let's start with the take profit. All right, 1.24701. Okay, let me enter the trade using market execution. All right, we have, okay, let me enter the trade using market execution. Oh, sorry, I mistakenly entered gold, so I have to exit the trade. I don't intend entering gold. I've closed this trade, so I have to select Euro USD, GBP USD, which is a major pair. Then enter my take profit, 124,701. All right. Then my Excel is 123. Let me use 123 first and go back to get the exact one that I marked. Okay, good. All right, so I'm on point. So I can leave it this way. So that means if the price gets to 124,701 to take me out of the market in profit, if it goes against me to take me out of the market in loss, that is what SL means, stop loss, to reduce the loss in your accounts. All right, why take profit is to add more profit to your trading balance. So we can see that the trade is already going well. All right, so this brings the end of this particular video guide. Stay tuned for more. PEEP calculation and how to adjust your stop loss and take profit while trading. So to get started, what is a PEEP? P-I-P. A PEEP simply means percentage in profit. I repeat, a PEEP simply means percentage in profit. Furthermore, a PEEP in Forex is the smallest price movement in a currency pair, usually representing a change in the fourth decimal place for major pairs like Euro USD, GBP USD, USD CAD, and so on and so forth. So any pair, any currency that is paired with USD or that USD is paired with will be seen as a currency that has 4 decimal places. All right. Why for Japanese yen pairs like USD JPY? All right, USD JPY, GBP JPY, any JPY pair, it is the second decimal places. That is where the PEEP, the count for a PEEP starts. All right, while major pairs is fourth decimal places. Now we have Euro USD staring at us. So let's do our counts. First of all, let's calculate the fourth decimal place for major pairs after a 0. 1, then 1. Start from the after the dot. 1, 2, 3, 4. All right. So the PEEP starts when the 0 changes to 1. Okay. So if we increases from 1 to 2, 2 pips. From 2 to 3, 3 pip. From 3 to 4, 4 pip. And it counts down to 9. All right, it is 9 pip. Now, if it's counting down to 10, this 9 will change to 0. Why? Okay, excuse me. That 9 will change to 0. Why the third number becomes 1. So this is regarded as 10 pip. Hope you're following closely. So that is how it's calculated for major pairs. Right, most pairs that has 4 decimal places. Okay, so let's go to our look at the live chart of one of the pair here. So as you can see, this particular pair in green, the fourth number and having 9 in front is regarded as what? 94 pips based on where your entry is. Based on where your entry is. So let me rephrase. Without your entry, if you have just zeros like this, the initial calculation we did, you should know where your peep will start counting from. So now let's go to USD JPY pairs. Or let's go to JPY pairs. Now we have GBP JPY. If you look at GBP JPY, you find out that after the decimal place, we have 3 zeros. Why for the previous pair we have 40 after the decimal place. So if we want to do our counts, 1, 2, 3, whole numbers, then a dot. So we have 1, 2, then the last number, this is regarded as 1. No, sorry, excuse me. So we have 1, 2. So the number second place for JPY pairs. So this is regarded as 1 pip. If it increase, 2 pip. If it increase, 3 pip to 9. So if it increase to 10, this will be 0, excuse me. Where the 9 will be 0, and why this will be 1. And this is regarded as 10 pip. So if it keeps increasing, you know what next. If this 0 changes to 1, 11 pip, to 2, 12 pip, and so on and so forth. Now, to make it a lot easier, whenever an Eazitrade coach calls a signal, the amount that you'll be risking will be stated as seen here. Alright, so as you can see, $1.50 is the amount that is being risked, while the amount to be won is $2.43. So all you have to do is enter the information as seen when it's been sent by the coach. So if you want to do your calculation, $1.50 using a mini lot size of 0.01 is regarded as 15 pips, because $1 is 10 pips and $1.50 is 15 pips, while $2 is 20 pips. Then 43 cents is what? Approximately 4 pips. Okay, so by adding both, it will be 20 plus 4, that's 24 pips. All right, so that's that for pip calculation. Now let's go to how to set up or how to adjust your stop loss and take profit. Now, since the market has closed since Friday, the only active market is BTC USD, and it's currently buying. So I'm just going to take a buy position so I can show us how to adjust your stop loss and the stop loss and take profits. So for instance, a buy signal is called for BTC. For instance, all you have to do is, if let's say the take profit is, the current price is 5,000, we count from the end, 5088. So let's use 5,200 as our take profit and stop loss as 5 or Use the stop loss to, yeah, good, and I buy. Okay, so I'm in the trade as we speak. So if I come to the charts, we can see where the stop loss is, right? Go to 5-minute charts, you can also see where the stop loss is. So based on this, the coaches now said the stop loss is too close, adjust. All you have to do is go look below your account. You have to be fast. You click long press to modify. All right, then adjust the stop loss to, let's say, 4,900. So once you adjust, you discover that the stop loss will go down further. That is the importance of knowing how to modify. All right, so until the price gets here, that's when you'll be out of the market. And for every time the coach wants you to also exit without waiting for the expected TP, if the trade is going in your direction, all you have to do is click on that area where the trade is running, click on close, and if it's in blue, if you're in profit or loss, because the trade coach can also probably spot something that will make him feel the trade will not go in the intended direction and say you should close. What you have to do is come here and click on close, like I just did. All right, so following instruction is very key when taking the signals. Okay, so that is that for trade modification. So the way the stop loss can be modified, the take profit can also be modified.
All right, so this is how you enter a trade. So once you open your MT5, the first thing you want to look out for is the quotes. All right, and you can find it here on the bottom left corner of your screen. All right, so once you click on quotes, if the pair is not there, for Android users you can click on this plus sign, and then for iPhone users you can click on this pencil sign here, and then you click and it takes you to this place where you find symbols. All right, where you wrote find symbols, you enter the pair, which we have here, USD JPY. That's the signal, but it won't appear here because it already exists. So on this list, just click on the USD JPY and then click on new order. So once you click on new order, if the signal is set enter entry price, what you need to do now is set your stop loss and your take profit. All right, so set them here, click here and click here, and then enter your details as was given to you in the signal. Right, so on the signal, whatever the signal says, for example, if it says 151 point, let's say 20, for example, as a signal given this morning, you set it. Then on the TP area as well, you do same, whatever signal is given to you for the day, for example 151.90, you set it here, and then you click on buy, as you can see here. So that's how you do a current market execution. Okay, but if you are now to set a pending order, you want to set a pending order, what you need to do is click this area, this market execution. So this is where you change, so you can click on buy limit or sell limit depending on what signal you have for the day. So this is a buy signal that you have, so you click here, and then you see this area where 0.5 is written. This is where you change your lot sizes. All right, you can see that the cursor is highlighted here, meaning that you can make changes. So if you want to use 1, for example, since you're doing demo, 0.5 to 1 as your lot size is fine. But if you are using a real account, we'll discuss all of that, the lot size that will enable you manage your account properly. All right, so for the buy order now, let's say I'm using one lot size here, so the buy order will be where they wrote price. Now if you're doing a current market execution, you will not see this price here because you are entering at the current price. But since you're setting a pending order, you'd have to set it here. So for the buy order, for example, let's say I want to use 151.50, so I'll be able to place this now because it's below the current price. So you see that this is done. So you see that it's showing here. So when the price gets to this point that I've set, that is where I'll be in the market. But if I had set a current market execution, I'll be in the market automatically. Right. So I hope this is clear enough. Cheers.
Good day, all. I quickly want to just draw attention to trading plan. Let's quickly go through. Let's just look at what a trading plan is all about. It's important for you to know, and it's also important for you to stick to your trading plan. So, what is a trading plan? We say a trading plan is a comprehensive, structured approach, that guides you as a trader when it comes to decision making in the forex market. A comprehensive, structured approach that guides you as a trader when it comes to making decisions in the forex market. Your trading plan outlines specific strategies, rules, guidelines which help you to maintain risk, identify profitable opportunities. Now, what are the components of a trading plan? What is a trading plan made of? Somebody said, whenever you fail to plan, it means you have already planned to fail. So in the forex market, you need to plan your strategy. You need to plan your day. Okay, that's you have to be detailed in planning. That is why your trading plan comes in. Now, what are the components of a trading plan? The first one is trading goals. You have to have a goal, a set goal, a realistic set goal. Maybe you are saying, okay, I want to make $2 today, and when I make that $2, I'm out of the market. Or when I make $3, I'm out of the market. I make $100, I'm out of the market. So that will be your number one, your target for the day. Your target for the day. So the first component of a trading plan is trading goals. And the second thing is risk management. Now you have to also state what you intend to lose. How many dollars do you intend to lose per day? When you pick a particular trade, how many dollars are you exposing to that particular trade? And then you also need to know when to leave the market. That is your take profit also will fall under your risk management. Looking at the pips you want to win for, you are targeting for that day. Okay, maybe you are targeting 100 pips or 20 pips or 30 pips, and then how much dollar are you willing to expose to the market? That one is under your risk management. And then the other one is your trading strategy. Which one works for you? Is it the trend line, the W pattern, or the head and shoulder pattern? You have to think of the one that is working best for you and stick to it. And then the next one is the time frame. Your time frame. Those patterns you are looking for, which of the time frame do you want to spot them? When you sight them on this particular time frame, then you decide to enter the trade. So the time frame you're going to be using is also very much important. Then position sizing. Here you have to decide your lot size. You determine your lot size. What type of lot size do you want to be using? Do you want to be using 0.01 or 0.02, 0.03, or a standard lot size? This is where your position sizing comes in. And then trading journal. A journal is a record that contains the mistakes you've made and then the necessary corrections. Okay, why did I lose this trade? Maybe you entered when you were not supposed to enter. Probably you entered because you failed to follow your plan, and then at the end of it all, you lost that trade. So your jotter, you write out those mistakes you made and then the corrections to the mistakes. That is your trading journal. Then psychological discipline. Now, when it comes to trading, you have to be robotic. It's not you don't need to be too emotional when you pick a trade. That is why your trading plan is very much important. You set your risk for the day and then your target for the day, and just allow the trades to play out. Don't be so emotionally attached to your trade. So your trading plan is very much important, as this will guide you in your trading. And as a student in Eazitrade Academy, it's important for us to stick to our trading plans. And remember, our scalping strategy, we have also there are rules and regulations which everybody must stick to. Okay, and those rules are already spelled out. So it's just for you to Stay disciplined. And again, one thing that makes your trading plan successful is discipline, self-discipline. You have to be disciplined. If what you want to see in the market, you have not seen it, there is no need entering the market. You stick to your trading plan. Your trading plan is like a guide, is a mirror. It guides you into just entering, taking impulsive and just buying randomly. So you know when to know when to enter the market and when to exit the market based on your plan. And the last one is market analysis. You have to look at the market, look at economic calendar, chart, your news. Before you enter market, you check all these places, all those things to know whether it is safe to buy a particular instrument or not. So these are just some of the things that your trading plan contains. Anyway, see you guys as we proceed. Money in the bank, no need to hide. Eazitrade Academy, we're on the rise. Rising profits multiplying. Eazitrade vibes got us all electrifying. From the streets of Abuja to the shores of Lagos, we're trading smart, no room for fiasco. Looking for gains, a community so tight. Eazitrade family will guide you right. From the streets of Abuja to the Lagos nightlife. Eazitrade grew forever, igniting the light.